Good morning, traders. It is 8:01 a.m. on Monday, the 12th of October, 2015. It is Columbus Day today in the U.S., a bank holiday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Quick look at the overnight wire. What we have, quiet Asian session with the Japanese markets closed. Shanghai rallies 3.3% on the People's Bank of China comments expanding a lending program. ECB's Draghi says inflation expected to stay very low in the near term, ready to extend QE if needed. U.S. Treasuries are closed today. The Treasury pits closed. Just now, about 15 minutes ago, Fed's Lockhart, a moderate voter, came out and said that October or December likely to be appropriate for rate hike, but still data dependent. Remember, Lockhart really moved the markets around the last time he talked after the rate decision, after not the rate decision, but the minutes came out. Very unlikely Fed's target inflation rate of 2% is going to change. There's not much else to report there on the news. Let's look ahead at the week since it is Monday. Well, let's look at today first. Today's calendar has very little on it. We have BOE Speaker Weil, who just released some comments. We have Fed Speaker Evans at 9:30 today. Evans speaks on policy and the economy in Chicago. We have Fed Speaker Brainard at 3:30 Central, gives outlook and policy speech in Washington. Those are the key factors in today's releases. The week has German CPI and ZOO figures tomorrow, UK CPI, PPI, ECB's Merch, Fed's Bullard. Wednesday, we have UK unemployment, European industrial production, US retail sales, PPI and business inventories, ECB's Merch, and Fed's Beige Book. So Wednesday's a pretty busy day. Thursday, we have US CPI, Philly Fed, ECB and Fed speakers. On Friday, we have European CPI, trade balance, US industrial production, University of Michigan, and ECB's JASBEC. So Wednesday, fairly busy. Also Thursday, and then Friday we have University of Michigan as the key figure there. Let's switch gears and look at our technical picture here. So when we look back on Friday, just as a quick refresher, I pulled up the video from Friday's Trader Bite pre-market, and I had explained that given the layout of the market, the fact that the market was opening right on the high, which was not a very strong high of Thursday, that the expectation is that it would likely make a higher high, and there was a coin toss, and I said in the video, if you watch it, at around the 11-minute 50-second mark or so, I said because of the location of the open and where we are in the rally against where we were on Fed Day, that it would be very hard to handicap which side has the edge that morning. So Hypo 1 was difficult to determine. Hypo 1 being, for those who don't know, Hypo 1 being the most likely the key trading plan for the day, the most likely trading plan for the day, or what we expect the market to do based on the conditions set forth in prior sessions and in the overnight session. And what I drew here was I drew an arrow. I'm going to draw on top of the arrow. I drew an arrow going down to the overnight low at 98.75, looking for a test, since we're looking for that overnight stat to be fulfilled at some point in the session with a high probability. I drew an arrow to 98.75, and it's just, I'm not saying this is predictable, but just by coincidence, that happened to be the low right there. So the market did both. The market tested higher, so I had an up arrow towards the 16. I was looking for the market to test higher into the 16 quarter area. So I drew an arrow going up and I drew an arrow going down to 98.75, and that just happened to be the low on the session. Other than that, the session was completely balanced. You could see a very Gaussian profile with a very valid value area. So this is in play today. So overall, Friday was a resting day. We did move the point of control higher, and we have a higher high over Thursday's session with a higher low. So overall, the short-term trend is up, but Friday was very clearly a balanced day and a day for shorter-term traders to be in control. So we didn't get anywhere. Nice test of the overnight low, as I said, and we did break the Thursday high. As expected, we did not manage to push through to the 16 quarter. Remember, this is where we're above the Fed day high, and we pushed basically through the FOMC on the 17th of September. We pushed through that high by just 2 ticks on Friday before we fell back through. We also left, one of the other things to observe about Friday is we left a double IB high structure on the day. We tested the IB high early on, right into the 8:45 to 9 o'clock Central Time, and then we came right back to it later on in the session around 10:15, 10 o'clock, and we were not able to take that out. So what we have here, even though it's a balanced day, we have a weak high. I'm still looking for that 16 quarter to be tested and for us to push through to the 21. But we'll see what happens today. Overall, the overnight session did not give us anything to go by. It did push Friday's high by a tick. Friday's high being this 12 and a quarter double top, and it pushed it out by a tick. Basically, in the overnight session, we had what's called a failed auction, pushed by a tick and unable to find interest in the direction of the push, and so it pulls all the way back through. But overall, the overnight session is Gaussian with what's called high kurtosis, meaning a very concentrated, the volume being concentrated, or the population or the data being very concentrated in the middle. So this is winding up. The volume overnight was very low, 96,000 96,000 on the overnight session so far. That's not much. That's not much, given that we normally have about 125 or so lately, if not more. We've had quite a few releases and stuff overnight, so that's been deeper. The last one was 252,000 right back here. You can see that the overnight session had 252,000 contracts traded, and then last night was 96, or this morning was 96, 97,000. So very light participation. So what does that say about what we're doing today? Knowing that the overnight did not provide anything but balance, we also know that the overnight left us with a point of control that was pretty much in line with where we left off on Friday. So the point of control on the overnight session is exactly the same as the point of control on Friday. So what we have is just continuous coiling. The market is resting up and is compressing for the next move. Don't expect too much today with the treasuries being closed in the pit. FX is closed as well. And so it's likely to be a very quiet session. We are opening inside of value. Here we are opening right inside of value, right up against the point of control. So I expect a test of 2010 at some point. I'm looking for this double IB high. If there's any buying whatsoever, the double IB high is likely to be the target this morning for me. But overall, I expect it to just chop around in here for most of the day. So that's the primary hypothesis. If it breaks out of here, it would be great. Then we're targeting 16 and a quarter and 21 above. If it breaks lower, then essentially we're coming back into that rally day, and we have some pretty important singles down here at 90. 90 with the high of the prior day in the area, about 91, 92. So that would be the target on the downside. So that's it. That's all I have for you for this morning as far as how things are shaping up. Quick comment. There was a question that was brought up, and I just thought it would be of interest here. I'll keep it brief. I have about 4 minutes. That, it's hard to tell if I'm real or I'm fake, or if I make money or I don't make money, and so on. When I created the futurestrader71.com website, in the About section, I talked about why I identified myself by an alias rather than a real name. And part of the reason is I wanted the focus to be on the message and seeing the message. Now, I know other people are starting to do trader bites in the morning and starting to do the same thing that's been occurring here for 2-3 years. But there are very few out there that are actually laying out the day live in front of you, and then following through and going back and saying, here's what was expected, here's what's happened. And a lot of times we do hit the primary hypo. A lot of times we hit our primary hypo about 7 out of 10 times during a week, is what I show in my journal, which is pretty good, as long as you can align yourself and find a place to lean against and go in that direction. There's a pretty good edge there, in my opinion. I know that there is. But on the days where it switches to hypo 2, or it goes to hypo 2, then it goes to hypo 1, and so forth, there are some losses there, because you have to kind of let the trade not work before you start reassessing your bias. And so there's a cost there. But the important message I want to leave you with here is it doesn't matter. It doesn't matter. Even if everything I'm telling you is something that I'm not doing, just focus on the auction itself. This is what's important. Just look, does this make sense to you? Is what I'm talking about making sense to you? Other than that, you're not paying me for this. You're not losing anything by looking at this, and you can always ignore it and move on and look at some other process. But I do see a massive fault in most traders that I deal with now through stage 5 in the online audience, in that they're looking for something that works right away, otherwise move on. And the fact is, everything works and nothing works. It's all a function of how much do you invest in it, how much of an expert do you become on it. It's important to get to be an expert on something and dismiss it almost like a scientist. It's not wise to say, well, penicillin, oh, that sounds stupid, and dismiss it. It's important to look into how it works, do the research, become an expert at it, and then decide, this doesn't work for me, this does not make any sense whatsoever. And then you can move on. But don't hop from place to place, and that's the idea here. If I came to you and I said I made $2 million a year trading the plan that I'm laying out here in the morning, it's not going to make you a better trader. It's going to make you believe for longer, but it's not going to help your execution. Your execution has to be built on the logic behind the plan. And that's what I'd like you to focus on. Don't focus on, oh, this guy comes on and he's always right. He's always showing that he's right. He never loses, or he's fake, or he's real. I see that in forums. I used to see that in forums all the time. It's completely useless to you in your trading career to think along those lines. Just look at what's being shared. It's being shared here openly. It's free to you. Just consider it a part of your process. Learn it, then take it apart and assemble it the way that it works for you. And that's the ideal situation. My prop traders were never told how to trade. They were given the basics. They were basically given what I'm going over here and in the webinars and stuff. and then it's their job to figure out what makes sense to them, what doesn't, combine it with what works for them, and then make it their own. Ultimately, once you click, it's your trade, not mine. So I just want to make it clear that it's irrelevant what if you're following someone or if you're studying something, it's irrelevant what the person's record is, whether they're real or not. Those are all excuses, in my opinion. It's much more important to focus on whether or not this is something that makes sense for you, because you can trade the market in so many different ways. This isn't the best way to trade. It's not the worst way to trade. It's just a way to trade. Same with a moving average crossover, same with a trend line based system, same with a fib based system. It just the only thing I caution you on is whatever you follow, make sure it makes sense in terms of the auction. Why does price move? A price move doesn't move because there's a 62% fib. The price moves because there is a need to test certain areas. There's an auction that's going on, and that happens across anything on this planet that has a price. There's an auction in process. The advantage of this is we get a lot more data. We get volume data. We get it at a tick granularity, and we're able to chart it and plot it the way we want to see it, and that makes it easy to plot out the auction. So just throw that into consideration as you're going through your process of learning how to trade, or changing the way you trade, or improving the way you trade. Just focus on what is the auction doing, and see if it makes sense to you. And this is why I review what I said the next day, and then we start from there going forward and looking at what the market's likely to do. Then we come back and review that. That's the process that you should be following, in my opinion. Good luck to you, and I hope that makes sense. Take care, and I'll catch you tomorrow.